All right. Hey, while we're filling in, I've got a bunch of swag to give away. So golfers, because I'm a golfer, got some cool shit.
Could you move? I gotta get some swag.
Don't touch my shit. All right. How many small businesses are in the United States?
75% of it.
No, not a percentage. How many in counting? How many? There are, come on. If you get it within 10%, I'm going to be excited. Huh? 7. You guys aren't even close. 33 million. There are 33 million small businesses. You did? Oh. Give John a hat. Okay. On Inc.'s 5,000 list, how many businesses fail within 10 years from making it on the list? Jack.
2/3.
2/3. Jack gets a shirt here. Somebody throw that to Jack. Now, that's interesting, right? So, does anybody have an idea, when I say you're captive eligible, right? How much revenue, employees, all that stuff, how many businesses do you think are big enough to be in a captive?
1 million.
10%.
10% of 33 million? That's a little aggressive. So the industry thinks it's about 7,000, which means that captive resources would have all of it. And it's just not true, right? That's just not true. If you take the NAICS data and you say, okay, give me everybody over 10 million to $1 billion in revenue in the 6 or so that, the industries that we would typically work in, it's north of 200,000, which shows you how big the available market is to do this, right? So if the competitor has, let's just say there's 8,000 businesses and captives, and there's about 1,800 formations across all domiciles every year, we're not even scratching the surface. Like, it's not even close, right? You look at Vermont, Tennessee, Utah, Washington, D.C., Bermuda, Cayman, they're adding 600-700 captives a year and formations. Most of those are going to be single parent, so these are pretty large companies. That's not talking all the stuff that you guys do every day that I did, right? Can you tell me what makes a good captive member?
Good culture of safety.
Chad gets a shirt. Here. I don't want to throw left-handed because it'll end up right there. That's right. Oh, go ahead. Have a seat. No, that's right. I'm going to paste those. So I'm here to talk to you about something. This is 2.5 years of my life's work, and I'm very proud of it. I'm excited. You're the first people to hear it. I'm excited to bring it to you. This is a big N thing. This is inspirational. All right. Does this sound familiar? I had 5 accounts that represented 50% of my revenue as an independent agent. And they were big. And they were always, getting poached, picked on, brokers, Marsh, Aon, all these guys trying to get after it. Remarketing, having to block markets and play this stupid game that we have in the insurance industry for whatever reason. And clients were aggravated, right? Rising premiums. Why is my premium going up? I couldn't say because, the carrier needs to make money. Because that's really what happened, right? Because your shiny, great account is generating lots of premium and making no claims, and all that money is going to pay for those other people who aren't doing that, and that's why their premiums go up. Plain and simple. Carrier needs to make more money. That's not a good conversation to have with a business owner. They don't like that. And so they get frustrated because there's no transparency in where their dollars are going. Like, why is it doing this? What's up? I don't make a claim. I don't see value in my spend. Everybody in this room has heard that say again and again. And so I started looking around for a new way, a new alternative to figure out like this is like I haven't been in the industry 20 years. I don't, my parents weren't in, they didn't own an agency. I came into this through another industry, and so I was like, this is madness. And then I found out, Scott Addis, captives. So I had an idea of what it was, how it worked, but there was like zero information to teach you how to do this. And the people who are in the industry, I think they're just trying to keep it a secret. I don't know, because you can't go get like, hey, give me a captive 101 where they run through all this stuff. You just have to go to this presentation that when you're on the phone with the captive guys and your business owner, client, and they're looking at you going, I have no idea. They don't even understand their GL policy. They're not going to understand alternative risk financing, which is what captives are, right? They have no idea what's going on. And you expect them to make these huge decisions on a 1-hour phone call. Like that's why, like a lot of these things just go nowhere because people don't get it. And we, as an industry, we don't do a good job of educating them. So I just made my own rules. And here comes Captive Coalition. So I got tired of other people determining where my life was going to go in the insurance industry, right? So that's when I decided that, okay, I'm going to make my own deal. And that is the inspiration behind Captive Coalition. Captive insurance program designed specifically to help independent agents retain their best clients and prospect for the big ones, right? Everybody in this room, if I gave you a $500,000 client, to which I have given 2 in the last week to agents in this room, because that's not what I do. I'm encouraging all of you to do this, and I want to show you how. All right, 5 rules. You're going to see me reference this here. 5 rules of Captive Coalition. 1, we only work with independent agents. Now, what that means is if you're Marsh, if you're Aon, that's good for you, but you're not getting into these captives. We had a discussion about selling your agency. If you sell your agency to one of those folks, that's fine. We'll allow them to service the account because I'm doing everything I can to help you maximize your agency value and retain that. So we'll allow them to service the account. They can do that. So you're not going to lose that value piece, but they're not coming in, and they can't BOR it. This annoys me to death. The BOR. Now, I know everybody in the room likes, there's a good way to do this, but, in the captive, if you work that hard to bring somebody in a captive and then the big broker gets a BOR, Scott, tell me, how does that make you feel?
Pretty good.
Yeah. We're not going to allow it. Now, there's some exceptions, right? You can't lose your license. You can't get accused for misrepresentation, fraud, whatever. But we're not going to do this. We're just not. 3, no solo business owners. I've just had this happen. I'm interested in captives. How do I join? Who's your agent? Marsh. Sorry. Well, can I just join as a business owner? No. I require everybody you have to have an independent agent represent you to join one of our captives. Period. End of story. No discussion. It's just going to be that way because I think you are pivotal to the success of the captive, right? I don't have the relationship. You do. You know the ins and outs of who this client is, right? You know where the problems are. And the people in this room especially, right? This is not just the typical insurance agent looking for business. You guys are pros, right? Chuck Goins, one of the smart, there he is. This guy is one of the smartest guys I've ever met. I mean, he knows his accounts inside and out. And that's the people we want to bring us business. And along with rule number 3, rule number 4. So when I say a business owner comes to me and says, hey, I want to join your captive, well, you got to be an independent agent. That independent agent is not me, right? I'm not here to compete with you. I just heard a story about a guy who was submitting business to a very, who was my competitor, and internally there was somebody else submitting that same business, and he lost that opportunity. That is absolutely crazy. That is absolutely crazy. So we're not competing with you, plain and simple. This is the most important rule. Always your client. It's not my client. It's your client. You're going to bring him in. I'm just the vehicle to get you into captive insurance. Period. I'm going to show you guys how all this works. I'm going to, we'll painstakingly go through how losses get paid and all these great things, but it's always your client. So here are 5 questions I get from agents literally every time I talk to them. And it's funny, as you get newer producers, the first question, what do you think the first question is? Who said it? How do I get paid? All right. How do I get trained? See the QR code? I want you to hit that QR code, right? So there's a downloadable. I created an agent guide to captive insurance. So you're gonna get a lot of stuff out of me. So I'll let everybody do that. Okay. So I've got a learning center. This guy, is it Denver? The Denver Summit? When they ask you answer? Yep. So he inspired me to go be a content machine. So I've got videographer here. This is Eddie. Content manager. So all we do all the time, we put new articles and videos out about captive insurance on our website. And you can search a specific topic, and there's tons of stuff in there, right? Just go look there. So this is kind of like the self-directed piece. So if you don't want to talk to anybody, you just do it yourself. And then I've got 2 calculators. I've got the pricing calculator, where if you put the comp, GL, and auto, right, premiums, and their average premium per year for the last 5 years. Put it in there. It'll tell you exactly what the underwriting profit would be, what the collateral would be, and what their max possible premium would be. So this is really good in my mind as a prospecting tool. You're going to call a business owner and you're going to say, hey, we can get you in a captive, and this is how much you would make per year. And take it, print it out. I don't ask you for the client's information at all. This is all about you guys. And then we've also got an assessment, which the assessment is using 10 risk management questions to determine how well they would perform in a captive. So you can do it with them, sit them. It's like an IQR. It is going to be the IQRM for captive insurance inside of our platform. So you'll see those same questions there, and you could administer it, there or on the site. It's up to you. Now, I've also got a pre-qualification form. One of my frustrations with the industry was it takes too long, right? It takes way too long. So what I want to do is make this as easy as possible. So you can click pre-qualify on our website, put the basic information. It'll put you next to a calendar link to go to me. And so we can talk directly, right, about your account. And I've got calls already where, hey, I don't think this is going to work, but I need to present a captive to them. Would you get on a call with the owner and just talk them through why this is a bad idea? Absolutely. I have no intention of taking this account from my preferred carrier, but I need a captive option. Would you do that for me? Absolutely. Once again, it's not about me. It's about you. How do we help you grow your agency value and keep and retain those big clients? How do I get paid? So this is interesting because not people in this room, but in the independent agent space, people are terrified to show their clients what they make, right? Putting a fee agreement together and putting that in front of their client, they're like, ugh. And so that's the transparency that comes with captive insurance, is that they're going to know exactly what you're going to make. Now, it's my job to make sure we give you all the tools and resources you can absolutely have to justify whatever fee that is. And I'm not, and then look, and I've actually pinged him a couple times, hey, what if we set it at 13 or 15%? We just said, if you want to join our captive, this is what we do. And the feedback I got was, no, I want to set the fee, stay out of my way. Okay, we can do that. But then we're going to give you the resources. Now in this room, we all know what the process is. We have all these other, like we can do it together. Most of the independent agents, as you know, they don't do that, right? They don't know what this is. They don't know what risk management is. They don't know what compliance check is or automated safety or any of these things, tools and resources to be able to help their client get better. Because the goal is once they get them in a captive, it's how do they become a profitable captive owner long term, right? How do I keep this from going wrong? Nobody wants to burn a relationship with a big client or any client for that matter, right? And in this question I get a lot is the unknown. It's like, what happens if? And I think the reason a deal's going to go south with a client is because there was an unmet expectation. It went wrong because something bad happened, right? And they didn't expect it. So I think the only way, the best defense is a good offense, is to show them exactly the good, the bad, and the ugly, and be very transparent and honest about it. Because this works for a lot of people. I'm telling you, business owners, I think you're a knucklehead if you kind of check the 3 boxes for me, and business owners don't do this. I'm just scratching my head like, how could you know? I mean, you and I talk about this. Like, you got to be nuts. It's a no-brainer. So here's our independent broker guide to captive insurance. I'm also creating, well, I did create an agent playbook. So it's designed to literally give to a producer, and you can use it for account managers. You know, here, go learn the talking points, because there are members here who just said, would you just come up and train my agents? And yeah, I mean, I'll do that, but I want to give you tools and resources that you can take back to your agency and be able to talk intelligently, at least at a high level, how this works. Because it'll open so many doors for you, right? So many doors. How can my client get screwed? Once again, this is being honest and transparent. You will pay more money to join a captive. Your client will literally pay more money to join a captive year one than they would in traditional insurance, right? There's collateral, they got to buy a share, they got to do, you know, there's going to be some loss control, but so it is substantially more expensive year one. Year two, magic happens, right? Because the actuary can now look at the captive, their experience in the captive, and that premium starts to come down because normally these accounts are really shiny and there's not a lot of claims. So we take out the fat that the carrier is charging them, and now that their premium will start coming down. And then by the time that kind of stops, well, now we're going to have distributions. So now they're going to get some underwriting profit, right? So you get this beautiful thing that starts to give almost right away, but they can have a bad claims year where their frequency numbers go crazy and now all of a sudden they're getting assessed. They have to know what that is and what it means and how to protect from a rainy day fund and how the assessment's going to get paid and all these other things. And then, you know, I mean, I've had a client go out of business who was in a captive. They literally took a $100 million revenue company and shoved it right in the ground. Big smoking hole. And that collateral sat there for 7 years. And that's reality, right? So they have to know that. Like, okay, you can exit tomorrow, but that money's not, like, we're not going to give that money back until all the claims years are closed. If they don't know that clearly and understand it, that's bad. So to me, that's when your client's not going to get screwed. They're only getting screwed if we failed and didn't do our job explaining the good, the bad, and the ugly, right? Can you see a theme here? This is going to, you're going to be able to take this and give it to your insureds, and it's a 101, right? I think, again, from the time in the sales process that we've all experienced from the different folks that we work with in captives, you just can't ask. I mean, you can, and you can see the results. It's an hour presentation to understand how loss funding and paying claims is going to work in a captive. Are you kidding me? I actually held a webinar for this group, and we were on an hour and a half, and guys, and we were 40 minutes into it on the first slide. So this is not something, and look, I don't think it's that hard because I look at it every day. But for you guys, it's not that. And so you don't need to have that expertise. If you want it, I am here to give it to you as much as you want, right? Warren, teach me claims from top to bottom. Okay, great. You have all my slides. I'll just give them to you. But clearly, we need to do a better job educating the business owners on how this works. Now, if you're not aware of what's coming in reinsurance, we are going to see an incredibly hard market for GL and excess. And it's going to be bad. Double-digit increases. I mean, I just pulled this off. What came out of that conference, and I think it was in Monaco or someplace. And Chuck's got a call. He's got to go. Not in the captain. But guys, you're going to see incredibly high renewal rates for your GL and your excess, and you're going to have a solution other than they just need to make more money, right? That's just not going to work. So when we take the traditional marketplace and put it aside, it is a beautiful thing when this works for the right client, right? For the absolute right client. So how do we make it easy? I'm never going to ask you to fill out a spreadsheet with loss information. For those of you who've done this, right? Is that not one of the most painful processes in your entire life?
Every year.
Yeah. So yeah, exactly. Every year. So we're going to do that because I know where the data. As long as you give me the data, right? Here's what I need. I need current year policies. I need 5 years of audits, right? Because I want to see exposures, and I want 5 years of loss runs, right? Just get me the data. My team's going to do the heavy lifting. We're going to put it all in, and we're going to send you the spreadsheet, right? In that spreadsheet, I need large loss detail, right? You're going to know like what happened and all these things. And by the way, we're doing this. We're down the road with the account. Like we know it's going to work. We know I don't want to get where we're doing this and we don't know it's going to work because that's a pain in the ass and a waste of time, right? So from the moment you give me the spreadsheet and the data and everything's checked out, it's my goal to get you a pro forma back to you in 24 hours. Now, what that does, it allows us to have a conversation with the owner to say, okay, had you been in the captive the last 5 years, this is what you would have made in using your data, right? And if if they aren't genuinely inclined at that moment, then this is probably a lost cause. Because if you're not into saving 50% on your spend for captives, then the rest of this is, you're just not going to get it. So this is a good telltale for me. I know other captive managers run it a little differently where, you've got to go through this presentation, you got to do all this stuff. I don't need to babysit you, right? We're gonna talk, we're gonna figure out it's a good account. It fits the box, we're gonna go get it. We're gonna do the pro forma, that makes sense. The money makes sense. Because if you're not profitable to the insurance industry, that's rule number one, right? If you're not profitable to the insurance industry, forget it. It's not going to work. But and then the last is we're here to present it together. Now, I'm on the call because I just want to understand the business owner a little bit from risk management, right? But you can take it and you can talk the entire time, and I'll shut up. Like if you can do it, great. No problem. This is about you. Like, how do I help you get these accounts and never have to go through the bullshit, well, that we've all gone through with these big accounts where all of a sudden somebody snags it, takes it, BORs it, somebody else gives them a captive. I've actually already had a submission on the same account. And I turned this on live to a month ago. So it's out there, right? And I'm not here to scare you to death about it. I mean, Rich, you've embraced this as much as I did, right? I mean, it is out there, and with a hard market coming, it's only going to get more prevalent. And I would much rather see the people in this room get those accounts than those other folks, the tyranny, as I call it. Oh yeah, there's your spreadsheet. How much fun. Okay, swipe file. So I'm giving you the 8 email sequence. I'm giving you all the transcripts of the videos. Take them, use them, send them to your clients, right? I'm going to continue to iterate on this, so you're going to get continued value from me about how to sell it, what to say, what not to say. So drip campaigns, page dedicated to Big N. That's all right. Now, my last piece is we set up, everybody know what an LMS is? Learning management. So we set that up in order to provide training for all of you. Now, Big N is going to get this for free. So, because master, we're going to give this to you for free. Scott was my inspiration behind captives from the very beginning, and has given so much. So we're giving this to you for free. We're creating 2 designations, one for account managers, one for producers. The people that create that charge for it, so that's their IP, that's fine. It's not going to be crazy expensive. But the rest of it's going to be free to you guys. You will see me on the internet charging people for this. Right? I'm doing it, but you guys will always have it for free. And it's designed to get you from 0 to hero. And I don't care if you're brand new in the industry or you've been around for 20 years. It's, and thank you, by the way, for the feedback. I was listening to you talk about the training that you went through and how it sucked. So if you go to my stuff and you're like, hey, this really sucks, just tell me. Now that's the trade. So in return for giving it to you, you're my guinea pigs. So when it breaks, or something doesn't go right, or you have to tell me, right? Tech is not the easiest thing to put together. And I've got the former head of training from an actual insurance carrier. She's now head of training for us, and she'll be the one to like onboard you and do all that stuff. I mean, I got pro people working on this, and I'm super excited.
It's just difficult when you can't ask someone questions while you're going through something.
So in that QR code, you're going to see 3 options. You're going to see an option for our monthly webinars, which I give, which if you haven't been to one, so every month I give webinars. I've done 3 for Big N. If you haven't been to any of them, we'll do them again.
They're recorded, I think.
They are. Yeah. Thanks, Chad. Yeah. We're working with Chad on a really nice $2.3 million. We're going to do a single parent captive. So I don't do just the group captive, right? That's everybody. It's almost commoditized to the point now. We do have in the works a group captive. What's going to be interesting about our group captive is that it is not the typical comp GL auto. That's it, fits in the box, goodbye. Is that we're actually creating a cell. So the business owner can have the group captive with a cell, and what that allows that business owner to do is, say they want to take their benefits, or they've got something else like in your world, in the horse world, that they want to put into a captive. As long as the regulator, and it'll be based in Tennessee, so as long as the regulator says it's okay, then we're going to allow it. It's not going to share risk with the group, but they don't have to open another facility to make this happen, right? Which what does that do for you? Well, that makes one more line of business or one more issue that they're going to put away in that captive. And once it's in there, guys, it does not come out. Like they are very, very sticky.
So if I understand what you just said, like, so let's say they do the group for the comp, GL, and auto, and then they put horse insurance in it also, then they're risk sharing the comp, GL, and auto with the other folks that are also risk sharing that.
Correct.
But then in the same facility, they've got their horse insurance that there's no,
It stands on its own.
stands on its own.
That's right.
That's
So
like an 831B.
no, but okay, I'll talk about. No, but microcaptive 831B is the same thing, but that is not a cell captive. A cell captive, I don't want to get in the weeds, but that came out of rent-a-captive. And Bermuda was like the first domicile to kind of make it where it was legal and it stood on its own. And it's like when you create a cell, you are part of a core, and it allows somebody to have the control, well, not necessarily the control, but like single parent, right? Where you don't have to kind of fit in the box. So as long as the regulator will approve it, it can go there without all the real dollars that it takes to actually open a single parent captive. Hang on one second. So everybody got the swipe file? Go get it, please. We'll make sure, just email me. I mean, we'll get you to the page. I want you all to use this stuff. Always your client. Always. Question?
Can you talk a little bit about the kind of the tax or estate benefits for owners?
Okay, so great question. I'm going to go back to 831B and I'm going to loop that together. If you're talking to somebody, a promoter, about captives, right? And the first thing that comes out of their mouth is, this is a tax play, run the opposite direction as quickly as you can. Because if you want to find yourself in the crosshairs of the IRS, go do that. Go get an 831B right now and see how quickly the audit comes. It is on their dirty dozen list, and they are adamant to try and shut it down. The captive industry is saying, I mean, some of the rules they propose are draconian. They don't even make sense. But the IRS, that's what the IRS does, right? They're going to make your life miserable. And there are plenty of good uses for an 831B. By the way, it's not a captive. It's a tax election. An 831B is a tax election that allows a small insurance company to not have to pay taxes on underwriting profit, just investment income. And it's tiered to, right now it's like $2.4 million. So if you had a premium of, under that, you don't pay taxes on underwriting profit, but you can't buy hurricane insurance on your $1 million building in Montana and justify it, right? This is why everybody got in trouble. And so there's 1,900 cases in front of tax court right now waiting to be heard. Don't be one of them.
What would you say is when a light bulb should go off in your head to start thinking about a client that should be a captive?
So my three top things that I say make a captive make sense. Number one, is the juice worth the squeeze? Are they spending more in premium than they're paying out in claims? Right? You know the account. They're good loss ratios, everything. Two, are they willing to take a little risk on themselves? Not every business, look, I've tried to put a couple nonprofits into these. The board just didn't go for it because they're too risk averse. And not to say every nonprofit's that way, just the ones that I ran into. Very risk averse. They would never take, in my legacy business, there's a business owner spending $2 million on insurance and he'll never get in one, right? His version of risk is, nope, not my problem. Somebody else is going to deal with this. I don't want to deal with it, right? And then three, and very, very important, does the management and or business owner see risk management, training, and safety a way to affect the outcome of their business? Because there are those out there that don't. Like, more training isn't going to do any better. Well, if you think that, and you have a bad claims year, and I come to you with a member development plan and say, hey, I need you to do these things to fix this mess, and you say no, you're going to be non-renewed in about a second. Because you're sharing risk you're causing everybody to spend more money, and you're not willing to fix the problem. it's not a good match, right? And there are those business owners out there. I mean, I know them. I'm sure you do too, right? So those three things, that's a great question. Those three things. Jack.
Start to finish, from when you have an idea and when maybe approach a client and have you start gathering information to when you can actually get a proposal to make something effective. How does that work?
Depends on the line of business, right? On some of these, so one of the things that we are adamant about on our group piece is that we have the pen. So I don't have to go to some underwriter in a carrier, in a fronting carrier. If you guys know what a fronting carrier is, by the way, I'm going to say these words. So I don't want the fronting carrier to have to say yes to every deal we put in front of them. Because my goal is to have like 50 of these a month. Because I think the independent, by the way, how much percentage of premium is written by independent agents in the country? Oh wait, I already asked that one, didn't I? No, I didn't. That's right. How much?
70%, 80%.
67. Does that tell you how much? That's how much we matter as independent agents. So if that's the case, 67% of the premium written, this can easily be, I'm looking to scale, right? This is why I stopped doing what Rich is doing, right? Where I'm trying to get business owners to call me. And I had a lot of content out there about that. And I just said, you know what? I'll never scale it to where I want to be, right? Without you. And so this is why I made the turn. So you're going to see Renew Insurance Group. If you ever Google captives, you'll see a bunch of my shit on the internet. And we're transitioning every single article to be agent focused. So it just takes a little time. Question?
Effective
Yeah.
date starts when
Sorry.
you started
Yeah.
talking about so you have all these different entities in one group captive. Everybody with different effective dates.
Yep. No. So how yeah. Chad's like, nope. So how that works is they will come in on in a midterm. Like my goal is we don't ever want to be in competition at a renewal. Like I don't want to do that. This is not a market to shop against Travelers or Liberty. This is a completely different way of buying insurance because we're not buying it, we're owning it, right? So renew them. 2 months later, come see me and let's go get this done, right? I got shirts. I got plenty of shirts. Who wants a shirt?